What if the low price of XRP isn't a mistake at all, but a pressure valve that controls a much bigger system? What if every dip, every stop under $3, and every strange sideways movement wasn't a sign of market weakness, but the quiet sound of a secret plan being carried out behind closed doors? What if I told you that some experts think the price drop in XRP isn't chaos, but rather coordination? If you like this kind of video, please hit the like button and subscribe so you don't miss the next one. What I'm about to explain will change the way you look at the whole XRP market. I found an interview with Dr. Jim Willie a few days ago. He is a statistician, researcher, and has spent decades studying capital flows that the public never sees. What he said stopped me in my tracks. Willie says that some of the world's biggest banks, like Bank of America and BNY Mellon, have been keeping XRP below $3 on purpose, not by chance or mistake, but on intent, quietly and with a plan. What was the reason? Easy. Before people figure out what XRP is really for, they want to buy a lot of it at very low prices. I too thought at first that it sounded like one of those crazy crypto plot theories that come up every so often, but then he started giving details that were too specific to ignore. Let's talk about the story Willie told and why it's important. Willie said it seemed like these banks might be working together with Ripple. Yes, the company that created XRP is building the infrastructure layer that banks will eventually use. This will help keep the price low while banks build up. He said that the talk would sound like this. Keep XRP below $3 for now. We're not buying it at $7 or $8, which is where it should be trading right now. Take a moment to really understand that. It is said that banks that used to make fun of crypto are now asking a crypto company to keep the price low so they can use it to buy more things. It sounds like a story about money, but the puzzle pieces start to fit together too well. This is where things get interesting. XRP wallets on exchanges have not only been going down in value, they have been crashing. It was said that Coinbase had almost 1 billion XRP on the platform. By September, there were only 32 million. It's not a mistake. It looks like almost 1 billion tokens have been taken off the market. XRP didn't go away. It wasn't burned. It didn't just disappear. It moved in secret into private vaults, over-the-counter deals, and official vaults that the public can't see. Willie thinks that non-disclosure agreements, NDAs, are at play, which are legal agreements that keep people from talking about what's really going on. In all honesty, that would explain why no one is talking. Not any leaks, alerts, or public signs, just quiet surgical accumulation. There was also the Larry Fink moment. Fink is the CEO of BlackRock and the king of institutional money. He was asked if a BlackRock XRP ETF was possible. You can guess what he said. Not at all. We don't have any plans. That's not going to happen. He said, I don't know. That seems strange to Larry Fink. When BlackRock isn't touching something, he says, I cannot say. This is what you say when you're limited, when you know something but aren't ready to say it as soon as the machine starts to turn. And people who are interested in XRP can instantly recognize the tone, which is like a wink from the company. Join the dots. It is said that banks are buying without saying anything, that exchanges are losing stock, that over-the-counter OTC liquidity is decreasing, and that the world's largest asset manager said something vague like, I cannot say about an XRP ETF. You can see why people who own XRP are so excited. Some feel justified, while others think they're seeing the beginnings of a huge change in the way the world's money works. What Willie said really drives home the point. He said that Bitcoin and Ethereum are like big pipes that let a lot of money flow through them without shocking anyone. XRP, on the other hand, is not nearly as big. So if even a small amount of the money that is moving through BTC or ETH starts going into XRP, the pressure goes through the roof. Prices don't just go up, they blow up. Now picture that pressure being raised by ETFs, which are like a fire hose that bring in money from institutions. At the same time, let's say that the over-the-counter stock is running out. Institutions can't get the deep cash they usually get. What do? They get what they need from the market. And all of a sudden, everyone can't get cheap XRP. That's how real price squeezes happen, the ones that make charts move violently up and down. In moves that don't look like they're crypto-sized, they look like early Amazon sizes. This is where Willie makes his most daring guess, the one that gives people who use XRP chills and makes them question their beliefs. He finds the idea that XRP's market cap has a cap funny. He thinks that XRP is more than just a way to pay. It will be a world liquidity layer in the future. It could even be an asset used to settle future trades. He even talked about Ripple's RLUSD, a stable coin that represents the US dollar and runs directly on the XRPL. He imagined a world where assets like XRP and RLUSD take over some of the roles that US Treasury instruments currently play. What did he say? One day the market value of all XRP could reach $100 trillion. Oh, a trillion. That is bigger than the GDP of most of the world. To be clear, I'm not making that forecast myself, but the structure he talks about is interesting. XRP, which is the neutral asset that can be used for foreign settlement. XRP as the fluidity of global money flow. XRP as the pipe that trillions of dollars pass through every day. And if that world did come true, it's not impossible for XRP to reach $10. It would be math. On the one hand, everything Willie said sounds almost too well put together, too dramatic, and too much like what strict XRP believers have been saying for years. That being said, even skeptics find it hard to explain some of the trends here. That's when things get interesting. The facts are the facts, no matter what you think about Willie's idea. There is something going on with XRP that you can't see. Let's start with the exchange amounts that are getting smaller. In every earlier cycle, exchange balances grew when consumers were excited. Some people kept their tokens on the sites where they traded, but the chart is backwards right now. Instead of flooding markets with supply, it's going away. That's not what you would expect during a bull market. It makes sense that people would be putting in more XRP to trade, but instead it's slowly and steadily leaving the system in huge, almost industrial amounts. It's not likely that regular people are moving coins into ledger wallets when Coinbase drops from almost 1 billion XRP to just over 30 million. In stores, coins don't change hands by the hundreds of millions. There are block transfers, repeated transfers, and trends of systematic accumulation. That's how institutions act. Institutions build up slowly and carefully without letting anyone know what they're doing, causing prices to go up, or warning retailers too soon. Then there's the OTC question. The lifeblood of institutional crypto trade is the over-the-counter OTC desk. When a business or bank wants a product worth $50 million, they don't buy it on the open market. To avoid slipping, they go over-the-counter. Several reports, though, say that XRP's over-the-counter OTC liquidity has dropped sharply. That means big players don't have as much luck getting big amounts as they used to. Is that true? If so, institutions only have two choices left. You can either wait or start buying on the open market right away. And what Willie calls hydraulic pressure happens if even a few of them pick that choice. A small pipe, a huge influx, explosive force going up. Let's talk about mental health now, in particular psychology in institutions. If a bank or fund thinks XRP is important for global funding or cross-border settlement, they will never buy it for less than its fair value. If they can, they will slowly add up over years. They will keep the energy down. The object will be thrown out in public. They'll say it's dangerous. They will make regulators even more worried. They will wait out the small investors who lose patience and sell their stocks when prices don't move for a long time. Don't think this is only a crypto design. This happens with goods. It takes place in stocks. It takes place in currency markets. Smart money builds up when no one is around. People who are bored buy dumb money. If XRP has been stuck below $3 for years, you could say that might not be censorship. That might be placement. Of course, that could be the long arc of strategic buildup. That could be the beginning. Another interesting point that Willie brought up that is often missed is how traditional banks are changing how they feel about Ripple. People didn't take Ripple seriously in the past. Banks either didn't care about it or thought of it as a small threat. However, now that we are in the present, big financial institutions are increasingly looking into blockchain. There are rumors that some people are trying Ripple technology in secret. Not the tweets that everyone can see, but the pilot programs, sandbox settings, settlement testing, and liquidity modeling that happen behind closed doors. It always starts that way with formal adoption, in peace. At this point, the story takes a sharp turn. If banks are testing Ripple systems behind the scenes, Willie's theory stops being a crazy plot and becomes a question of when things will happen. When banks are stocking up on an asset, they want it to be cheap so they can use it for things like liquidity, settlement, or cross-border lines. Institutions don't want to spend billions on something that costs a lot already. The goal is to get as much cheap stuff as possible. Even the legal situation with XRP fits this story about time. Since the SEC case went on for years, prices naturally went down. Even if Ripple had nothing to do with the alleged coordination, the timing was still good for any organization that wanted to buy XRP before it became very popular with regular people. Regulatory uncertainty is one of the best ways to keep prices down in the whole world of banking. Then, what happens when the case is finally over and things become clear again? Not a quick shot at the moon, but move slowly and carefully, bringing together. More money leaving markets, there's more quiet. So far, no madness. It's almost like someone is still gathering. Let's look at how the market acts when it is consolidating. XRP has had extremely long accumulation zones that have lasted years in some cases. Volatility has been squished into narrow ranges, making it seem like someone is holding the lid on. Not with full force, but with steady pressure on the other side. Traders say that XRP doesn't make sense in the real world. What if it doesn't make sense? What if it's being watched, even just a little? Let's talk about world cash flow now. A lot of banks and Ripple have talked about CBDCs. They have been making roads in Africa, Asia, the Middle East, and Latin America. They've teamed up with companies that handle billions of dollars in money transfers. They aren't building for small traders. For the world's banking pipes, they are building, and a neutral bridge asset is needed for that system. Tsunamis can't be sent through slow, broken lines. You need something right away. Something that can grow, something that doesn't cost much, something that is final and acts in a way that you can trust. For business use, XRP is the only cryptocurrency that fits that description better than any other. That's why people who laugh at the idea that XRP could one day be used for world settlement don't look at the math. They want to know how much it costs. Also, an asset's price doesn't always show what it's really used for, especially when things are building up behind the scenes. Willie also said something important, but not obvious. Most of the time, institutions lie about their interest in an object until they don't have to. Take a look at Bitcoin. Banks made fun of it for years. They told people not to do it. They said it was just a guess. And then, behind the scenes, they bought it. Most of the savings had already been made by the time institutions officially accepted Bitcoin. Gold went through the same thing many years ago, with stock in Tesla. And this is Amazon. Apple-wise, the public never gets to know about the early invites. Now we come to an important question that a lot of people who own XRP don't think about enough. What if everything that's happening now is just getting ready? It's not manipulation. This is not a plot, but getting ready for a bigger part. Banks will want a global cash asset before regular people do, because it will really help them. They will need enough supplies to make passageways work on their own. They will need enough cash to settle flows worth billions of dollars. They will need to distribute enough to meet the wants of everyone in the area. That kind of building up takes time, usually years. It all makes sense if that's the stage we're in now. This is not advice about money. This is where the story of XRP starts to go in a way that most people are not even close to being ready for. It's painfully clear that the market is pricing in a future that most people still haven't caught up to when you look at the big picture of policy signals, liquidity changes, and cross-border settlement behaviors that are happening right now, especially in Asia. Japan's yield climate is a great example of this. The BOJ's slow and hesitant normalization is now speeding up because they can't ignore the fact that capital flows around the world are demanding higher returns any longer. It's not just the Japanese bond market that changes when prices go up in Japan. It sends a shockwave through all of the FX corridors that are linked to the yen. Some of these places are the US, Europe, and most importantly, the emerging markets that Ripple has been focused on. Since the yen isn't as safe and stable as it used to be as a low-yield base, what role does XRP play in this new world? You can find the answer in how well the town works. When there is more FX fluctuation, settlement inefficiency costs a lot more. A 2 to 3% rise in the value of a currency during a cross-border transfer window can wipe out the profit margins of money transfer companies, banks, and even central banks. This is the reason why the desire for real-time, free pre-funding settlement is no longer a choice. It's becoming a must. This is exactly where Ripple has put XRP as the layer of liquidity that fills in the volatility gap. Take a look at this. For years, people who didn't like XRP said that its instability made it useless. Volatility is exactly the reason why XRP is needed now. If the value of the yen changes a lot while a bank is waiting 2 days for settlement approval through SWIFT, that bank could lose a lot of money. But if they can use XRP as a bridge to pay right away, the volatility window shrinks from days to seconds. This is the part that most people don't get. Settlement speed isn't just for ease, it's also to keep institutions from losing billions of dollars in foreign exchange. Let's dig deeper because there's something else going on below the top that not many people know about. Japan is not acting alone when it tightens. Korea, Singapore, and parts of the Middle East are all moving in the same direction. When yields go up, so does the desire for capital-efficient ways to get cash. That means that every hallway that used to use pre-funded Nostro accounts will need a digital replacement at some point. XRP was designed to be used in this way, not just in theory. Not in terms of ideas, by machines. Banks don't want their money to be stuck in accounts that aren't being used anymore. Not when yields are going up all over the world. They can free up cash, lower their risk, and do business more cheaply if they can replace pre-funding with on-demand liquidity using a neutral, real-time asset. This change isn't based on ideas. It's about staying alive financially. Now that we look at how Ripple is growing in Japan, the Philippines, Singapore, and Australia, we can see a trend. Ripple is not trying to work with big U.S. banks. They are putting themselves in the markets where changes in yield and inefficient use of capital are having the most impact. For the same reason, we're seeing early signs or quiet regulatory green shoots in the UK, Switzerland, and Dubai. Together with the way the BOJ works, these areas make it possible for XRP demand to grow at a time when global liquidity is going through the biggest changes it has seen in decades. The most important part is now here. There is no longer a world where XRP is worth what it was worth yesterday. The market is setting prices based on what it thinks will happen in 2019, even though the infrastructure, political will, and monetary forces have changed a lot since then. And when that disconnect ends, which it always does, it ends fiercely. That's why it's more important to look at ETF flow data than the XRP picture. The price of the ETFs hasn't caught up with what they're showing yet. Conviction from big companies that know about changes in structure liquidity before regular people do. They are not dealing news. Instead, they are getting ready for the policy wave. Japan's change in yield is just the beginning. Repricing settlement facilities around the world is what's really going on. And XRP is one of the few assets that already has a real system built around it that works. A real enterprise-level payment network, not just a promise or a white paper. People who invest don't realize how rare that is. And this is what no one talks about. Liquidity lanes don't grow in a straight line. They grow at an exponential rate. XRP stabilizing the volume of one route helps more than just that corridor. It makes execution better and lowers slippage in all lanes that use the same asset. Liquidity leads to more liquidity. In that way, assets go from being special to being systemic. This is why the BOJ's change and Ripple's plan for Asia are more important than anything else in the news right now in the US. Because global macro variables, not consumer opinion, are what give a settlement asset long-term value. When you understand that, all the noise goes away. It's not responding to the market with XRP. The market is responding to the problems that XRP was created to fix.